right, here we are. We said we'd come and start the gamma experiment today. And so that's what we'll do. I'm doing this from Salt Lake City, and I'm remote, just a regular old trader. But there's something in the market that I think represents an opportunity. I'm going to share my screen and show it to you. The first one is right here. It's SPY. And I've got a line marked off. I'll explain why I mark off these lines here in a minute, but I just want to tell you what it is first. I've got this line marked off right here, and this is a line at which it's worthwhile to go on a mean reverting trade. I've got a secondary line here. My method is to look for one potential opportunity, and if in fact it goes hard against, then I can have a secondary opportunity up here, or at another point. This is that point. So if in fact we see SPY get up to this point, then we will be entering a trade, and that trade will be to buy a put option on a 0 DTE a 0 DTE. It expires today. It expires, just right here at this line. We're going to buy a put option that expires in 2 hours from now, with the idea that if it moves even a little bit down, it will probably create more value in the option than what we had to pay for it. Now, back here at this line, I entered this trade and I got in at, let me put it on here, $1.08, and that was on the SPY 692 put. 692, yeah, which expires today, right? Now, as you can see, that's gone against me. And for a little while, it was going ahead, going in my favor. And this wasn't very much. It went from $1.08 up to about $1.18 at the most. But that's not what I'm after. I'm after this amount down here. See how the dead zone shows a $3.07 target. So I'm looking for this thing to retrace $3.07. That's a huge move compared to what it's done today. Do I think it's really going to do that today? I'd be shocked. I'd be shocked if it moved $3 today. But you never know. It could. Stuff happens. My experience with this has been on a quiet day that stays quiet. Even at the end, you can get a reversion back down to kind of, somewhere in here or lower. And it is from this point going forward that the volatility, the amount of price change happens. Okay, we're getting ready here. On my other screen, which I'm not showing you, I'm looking at a quote for what would be the 692 option, because it's the same one, right? Just going to add more contracts to it. But if you hadn't entered and you got up here and this was going to be your first one, you could do the 693. So right now the 692 is going for, looks like 87 cents. By the time it makes it all the way up there, it'll probably be in the 70s somewhere. And the 693 is going for $1.27 right now. I like to get it lower priced than that. But what is behind all this? So that's the trades. I just want to let you know that's here. Give me a second. I'm going to put another one here. If it actually makes it up to there, then I'm going to look for adding the same contract. And probably that's going to be like, 0.75 or something. We'll see what it is when it gets there. Put a question mark because I'm not in yet. All right. So that's the trade. Now, why am I making these trades? Well, okay. As I mentioned, whoops, here we come. What's the price on that? Got to keep an eye on it. Boy, it hasn't dropped. The price has not dropped much. it made that little step up, and the price went from now it's down to 83. See, option market makers, they don't like to lower prices if price is moving around fast, and so this we may not get it at 70 or 75. Might have to do an 80 or something. In any event, we'll keep an eye on this. I want to see that price over that red line. Now, here's the deal. I'm looking for prices that have moved far enough away from this thing I call the dead zone. The dead zone's kind of like, here's where past prices are going to try and magnet to, or the price will sort of, this will act like a magnet to the price. Maybe not today, but generally, and there is an edge built into this dead zone. And so I figure, all right, if this is where prices are going to head towards, I want to make trades that are reversion to the mean, right? Now, I call this thing the gamma experiment. The reason I call it that is that option guys, they use something called the Greeks, option Greeks. And these are a set of variables that calculate what option prices should be. Delta, you might have heard of, is the thing that tells you, if the underlying stock moves $1, the option is going to move whatever the delta score is. So if the delta is 50, that means if the underlying stock, in this case SPY, if SPY moves $1, an option with a delta of 50 is going to move 50 cents in price. Okay. Gamma is what happens if the price moves a second dollar up. How much will the delta change? Now, in other options that have a lot more time before expiration, that gamma is not all that high. It's 1 or 2 cents or 3 cents or something. But when you get down here, the gamma starts moving up. 7, 8, 9, 10, something like that. And we keep an eye out here, because if that thing's going to run up and hit that red line, then that's going to be another entry point. And I want to check out what price could be gotten for that. Set that order up. Okay. And all right, we are there now, and we're looking at 81 cents. I'm putting on, you heard that trade, that's a simulated account, it's a paper trade, and I got that for 81 cents. So we're doing this as an experiment to see if in fact we could make this reversion system. We find these moments where price has probably gone too far, and then it starts coming back, and the gamma built into these options, which right now the gamma on that 692 is 12. It's kind of high. So, which means that the delta is going to increase by 12 cents or 12 points with every dollar that this thing moves. And so, in other words, if all of a sudden this thing starts moving in my favor and it moves $3, that gamma number is going to make this thing go ballistic. I mean, just to give you an idea, if in fact this thing were to run down right now and say hit 690 within the next 15 minutes, I mean, it's probably not going to do that. But if it did, that gamma would make this thing become worth about $3.50. Well, it's only 81 cents to begin with. If I lose it, I lose 81 cents. If I win it and I win $3.50, that's great. If I'm right only 50% of the time, I'm killing it. Usually in a setup like this, if there's, if you're risking a certain amount and you're trying to make triple the amount of what you make, well, just randomness of prices should dictate that you would only win that thing 25% of the time. As I've been experimenting with this so far, I found that the win rate is a little higher than that. I mean, okay, a lot higher than that. And I'm a little surprised, but I can only think that it is because of this gamma effect. See, what happens is option market makers, if you're buying an option, they're selling an option. If you decide you want to sell an option, they got to buy an option. That's how they get the order flow. They want that difference between the bid and the ask. On SPY, it's only a penny, but they're getting thousands and thousands and thousands of contracts being bought and sold all day long. So, they're making money that way. Interesting. I love this, right? We got right up there, touched that, and came, and we're pushing down from that. I mean, it could go way up and then still come way down. I'm not too worried about it immediately. It's just fun to see, hey, we got right to that price point and it started pushing down. It's a nice confirmation that price really does have a little resistance at it. Now, the gamma behind this is going to possibly create trades that will pay out bigger than what you should expect. There's risk here. I mean, you're buying this option, and if you accidentally hold it all the way to the end and it's in the money, then you're going to have the option exercised, and you better have cash in your account. So I specifically set this at 15:40, 20 minutes before the market closes. I don't want to get in anything after that point. And I want to try to be looking to exit. I want to be in and out inside of 2 hours. That's the whole setup. Because I want that gamma. See, the closer and closer I get to the end, the higher and higher that gamma gets. In fact, I'm looking at the gamma score on that same 692 I'd mentioned before. It was at 12. It is now at 13. Just that little bit of time, gamma is going up, which means that if the thing moves $1, then the option price will more rapidly increase now than it did earlier in the day or previous days. So what I'm saying is, in this last 2 hours of a trading session, the opportunity to buy something that might rapidly increase in value is increased. I mean, just last week, I was looking at an option on Google, and if you looked at the price of Google, it only moved 0.5% of Google's regular price. 0.5%. If in fact you were to have checked the options that were set to expire, 45 days out or more, you would see that option changed in price by about 10%. 10% increase in price from $9.50 to $10.50. Okay, $1 on $10, 10%. That's not bad, especially when Google only moved 0.5%. But if you looked at the same day, the 0 DTE option that expired that day, right at the price, that changed 1,200% in price. Yeah, it became more than 10 times as valuable. It went from 7 cents to like $1.05. So it was, even more than 1,200. It was almost 1,500 at its max. But it's just an incredible price change. And the thing is, if you have the ability somehow to capture that, I didn't. I captured a double, but I didn't capture 1,500 on the day when I was making that trade. But the point is that if that's available, if you have the opportunity to capture something more than double, triple, or quadruple, right, then that really changes the balance. It's kind of like this. What if you walked into a bar and there's this rich guy and he's drunk? He doesn't know what he's talking about. And he says to you, hey, you want to make a bet? And you think, is this a setup? What's going on? I'm going to flip the coin. And if it's heads, I win $1. But if it's tails, you win $1.50. And you assume, you think it through and come to the conclusion that it's all legit. This guy is just really too drunk to understand what he's saying. But he's giving you a 50% edge in your bet. And you think, how many dollars does this guy have? Right? How many times can we do this before he passes out? That's what the gamma experiment is. The market is pricing stuff at a level that is potentially too advantageous to the retail buyer. But the retail buyer has to be careful, has to be, not nutty. And if you're only going to get one bet, you don't bet the entire house, right? Uh, um, I'll save that story for a little bit later. But anyway, the point is that if we're careful and we allocate our risk, little by little, I like to say, let's just use the 1% rule. If I put on 1% per trade and I win it, and I win, maybe 0.5%, maybe a full percent, or maybe some days 2 or 3%. Over time, do I have a positive expectancy? Should I keep playing? Right? That's what this experiment is all about. These might go to zero. They might go to nothing. Where would we be in that case? Well, we would be out $1.90, and if you were actually to put those trades on, that'd be $190. Fine, that's no problem if you have a $20,000 account or larger. If you have a $2,000 account, that's too much, right? So you want to be looking for trades that fit within 1% of your account. If you don't have that, well, don't do this. If you want to learn it, though, as I do, then be putting this in paper trade and just track it. See how it goes. All right, so I've done the whole experiment and the whole explanation just on SPY, but it's not SPY only that has these opportunities. So here's Apple today. In fact, Apple, I missed that 5 minutes ago. It just crossed the line. I'll come back to that because if it's going to come back up, then I can get in there. Amazon just crossed that line. And Microsoft, yeah, like all of these crossed. Okay, Microsoft is still there. Let's check the prices on Microsoft. What if you were to put this trade in right now on Microsoft with the idea that, hey, it's going to possibly come back down sometime in the next couple hours? What option would you use? Well, we have a 400 that expires today. We have a 400 and we have a 397.50. 400, see, we're a little bit in the money because a put option is up above it, right? And so the next one that's out of the money, I always try to take the first one out of the money, is 3,750. It's clear down here. Well, Microsoft has a $3 target, so this thing would have to go most of its target in order to make that trade. The safer trade is to go with the 400, go with the first one in the money. When I say safer, I mean it's going to have the intrinsic value. And even if all that happens is it just goes down a little bit, then you could still make money on this. If it goes down a little bit and the 397.50, we never make it to 397.50, this thing goes to zero. So, right. So right now the 400 is at 128 and the 397.50 is at 36. I'm actually going to put on the 397.50 at 36 because I've already got a trade on and I don't want to add a bunch of extra risk there. And we'll do that. So that's a small amount. If in fact it fills, there, it just filled, okay. Then I just have $36 per contract that I put on. So, hey, $36 works even if all you have is a $3,500 account, because that's just 1%. But we'll see. We'll see how this all plays out. I'm going to put on the notation that I actually did that with the 397.50, and I bought it at 36. Is that the trade I made? I'm going to double check that. What was the actual fill price? There we go. Yeah, 36. All right. So that's where I bought that one. All right, Microsoft. Now, how about Meta? Meta's not there yet. Meta's got this line right here. SPY, we've been to. IWM, IWM's got a line up here. See how that line's curling down? That means, it's coming down. This is moving so slowly. I doubt we're going to get anything on IWM today. QQQ is crossed over the line. Where it is right now is an entry. So I'm going to give that one a try. QQQ at what price? We're looking at the 616 is the first one out of the money. It is $1.62 right now. So we'll just have to use a smaller number of contracts for that one to fit my account size. Okay, excellent. So we've got that one, and that one came in at a price of 160. Yeah. So I will mark that. And we'll see how these go. We will see how these go. Now, these are all kind of well correlated, and that was the 616 put. Oops. These are highly correlated. So the problem is that if one loses, they could all lose. At least the indexes are, but the nuances are surprising. Even Microsoft, it could run differently from the others. There we go. Oh, sorry, I should stay on this one so that it keeps the look the same. Okay, so this one here, while we've been talking, I got into Microsoft at 36 put. QQQ was going up, but this had already gone down. This is what I'm talking about. They're not perfectly correlated. So that one right there on Microsoft, we'll look at what it's going for right now as we it's at 40 by 43. 40 cents bid and 43, 44, 41. Yeah. So right now, if I could just close this out, I would make 5 cents just from it having gone down that far. But this is Microsoft. Microsoft, towards the end of the day, it will create bigger candles. These tiny little candles, that's middle of the day stuff, right? And this option pricing, it gets based on a little bit of this here, because the option market maker can't perfectly predict how big the candles will get going into the end. But just look at this. Here comes Microsoft, price, up, and from this point, it's just sort of stopping. Not a lot of buyers right here. All the way up, the market maker has to be on the other side of this trade. That if everybody's buying, then the market makers, right, because they compete against each other for it, they're selling. And if they're selling all the way up, then that means right here, they're short. Guess what they want the price to do? Guess what they're going to try to make the price do by adding new orders of their own? They're going to double down on their sell short orders, push it down a little bit lower, and then try and get out. That little move can make the price move faster than expected, and therefore you get the gamma benefit. So again, that's how the gamma experiment is working. We're just looking for stuff that moves extra fast towards the end of the day. Here's this, back to this SPY. It looked like, oh man, we got run over on that one, at least so far. You never know if it's going to come all the way back. And there was going to just keep going. But no, right here at that line, it's pushed back a little bit. This is in real time. We don't know exactly how it's going to end up. But hopefully you can see why I'm interested in giving a shot at these lines. They seem to be pretty good. They're based on these Keltner channel bumps, which I don't have time to explain those today, but in next week when we do this, I'll actually open that up and show you the settings, these Keltner channels, and why the bumps get created and why that turns out to be a good level to consider. All right, so right now, I'm just looking at the price on that Microsoft. Microsoft is still 40 by 43. SPY here is now 83 cents. So this thing I bought for 81 cents is 83 cents. That's nothing really. It just means, yeah, it is working. It's in positive distance. We're going to see if over the next hour or so, the the price is going to, the candles are going to get bigger and that gamma is going to kick in. Some other opportunities, we saw Apple. I wasn't there. I wasn't looking at it. I was talking to you. So I didn't put that one on. I'm trying to do this, as I would if I were live and was talking to someone else who was distracted. Wow, that Apple would have been great, though. Look at that, right? Moving down. But that's okay. If Apple goes down, it's going to pull down the averages, right? QQQ, SPY, it's going to put some pressure on those. So, yeah, go, baby, go. Just drop, drop, drop. That being said, 274.86, and we're down to 274.24. That's a 60-cent move on Apple. If I had been, I'm going to look up what those prices were on Apple and see how much of a difference that could have made. We'd be looking at the 272.50. There's the 275, but that one's in the money. The one that's out of the money is 272.50. The $2 target. I think on this one I would have wanted to go the 275, the one that's in the money. Yeah, so let me look and see what that was just a few minutes ago. And okay. Oh, yeah. Wow. So as of 12/16 or 14/16 rather, so like right in here, it was as low as 51 cents. We would not assume that we would get that. We might have been able to get 55 if we were quick, maybe 58. It is right now at 85. It was as high as $1 just a few seconds ago when it was down, that level. So think about that. We went from 55 cents to $1 in about 15 minutes. In 15 minutes, this option doubled in value. And if Apple keeps going down, it's not over yet. Maybe we'll see even more. But that just gives you an idea of the gamma effect, that super acceleration of prices that really could be beneficial to an individual trader. Amazon, okay, we're back right here at the level. This is something I could go ahead and put on. Amazon. And while I'm dallying, it's going a little higher. That's fine if I can be patient and somehow know that it's going to go higher. Okay, 210. We're right at 210. The 210 is only 50 cents right now and dropping because that thing's going higher. So that looks great. I definitely want to try that one out. Yeah. If you had a $5,000 account, buying one contract of those would work just fine for you. And is it going to go a little higher? If it's going to go a little higher, I'll let it because I want to try and grab that at as low a price as possible. But I think I'll just go ahead and put the order in right there. And we'll see if it fills. Might have tried to bargain shop that too much. Waiting for the confirmation. What's the order? Order's at 5th. There it is. Now filled. Okay, so this one I got in the 210 put at 50 cents. And we will see where it goes from here. All right, Microsoft. We talked about this one. We bought this one out of the money. 36 cents is what we paid for that. What's it doing right now? It's 49 ask, 45 bid. So you could get out with 45 cents right now. Just that little bit of move. 45 cents. Think about that. That's 9 cents off of 36. That's 25% increase in 15 minutes, right? And it hasn't even really started moving yet. It won't start moving for probably another half an hour as we get into the last hour. And then ultimately the last half hour is when the biggest moves really come. So if I can hold on, see, this is 36 cents, right? It's like if it goes to zero, it goes to zero. But if it goes down to here somewhere, below 396, that thing could be worth a lot more. Now it is a 397.50, so at the very last moment of the market, that's going to be intrinsic value only, which means it's only going to be worth the difference between here and however much lower it is. But again, if it made it all the way to 396, that'd be worth $1.50. $1.50, that's more than 4 times as much as I originally paid for it. So that's again reinforcing what I've been trying to say, that the gamma experiment is these gamma readings could give you much higher prices than what you paid for. Okay, this one we're looking at right here, this Microsoft, yeah, it's up to 46 cents right now. So 10 cents on 36 originally purchased. Amazon, we're probably gonna, that one's probably gonna be a sunk cost, right? A huge. They don't always work. Here's the Apple one. I did not get in, but as you can see, it's going back favorable there. SPY, Amazon's given it a little help, I guess, because we're not getting anything out of that. QQQ, similar. All right, well, that's our first time around. And all we have to do now is sit back and wait. And the waiting is a big part. As we go through the final 2 hours of this, we're going to want to watch how do these play out? How do they, how do we get to a point where we know when it's time to exit? Well, you don't always know perfectly, but let me show you what happened just yesterday here on this trade that I was doing with IWM. So same kind of thing. I get the line, we get up above it, I get in, it goes way up and it comes down. It comes way down to here. I bought it at 64 cents. And when it's down here, it's like $1.05, $1.10. And I realized, hey, if this thing doesn't keep going, we're getting into that last half hour. And if we have a reversal, it's gonna reverse hard against me. I also knew this. Look, IWM did something similar to what we're doing with Amazon or many of the stocks today. A lot of buying right at first, and then we just went sideways rest of the day, right? But notice the difference. This one didn't go up, 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 and up for a whole 45 minutes or so. It just went up, stopped, then went up a little more and stopped and came back down to where it was. When you see that much back and forth, you know that option market makers are able to flatten their position. They don't have to be overweighted on one side. And so they're not going to create as much push at the end of the market to try to get their accounts settled and zero. They want to go home flat every night, no overnight risk, no worries. And so when I saw this and I saw this move here, that's exactly the kind of move I was looking for. But it's a $1.24 target, right? 163 minus $1.24 should put me at 262.40, 262.80, right? I'm only 40 cents away from what the dead zone target suggests. Whenever I start moving, that's the amount of move that I'm gunning for. I'm like 2/3 of the way there. And I figured, okay, if it reverses hard, then I want out. I just want to take whatever profit I can get because we're close to the edge. And so I did. I set a trailing stop and it came up and hit that. Had it kept going lower and lower, fine, I would have let it. But this one, it stopped me out at 95. So I bought at 64, collected 95. Not bad, 45, 50%, whatever that is. It's like, if that's, this is like a tie in the score. I didn't get what I was really hoping for, but it's not bad. It's something. So it's not a loss, right? And if I have to, I'm going to do that. If I have to just let it run and make a loss, I do that. But we're keeping track. See, we're keeping track of the percentage of win and the amount of win and everything. And so when we come back next week, I'm going to show you all of the trades I put on throughout the week, how many were wins, how much they won, and whether or not the system actually works. for today, I just wanted to show you what we're doing in real time and what it looks like. Hopefully that's been entertaining to you and interesting. But you should come check us out next week as we try it again and again. I'm doing this for free just to help everybody learn for themselves the gamma experiment. Is it possible for a retail trader to get an edge on institutional traders who have to play by these gamma rules, right? We'll see. We'll see if it's possible. And until next time, everyone, I'll bid you take care and trade well.